If you observe here, you'll notice that this market is ranging. So you see, the market is ranging on a weekly time frame. It's ranging. Forget about the weeks right now that you're seeing. Okay, the weeks are basically for manipulations, stop homes, and this kind of movements. Do you understand what I'm saying? So that's it basically for the weeks. But the market is what? The market is ranging. So what usually happens when market is ranging? That market will create some kind of equal lows or equal highs. And then when the market is ranging, you just want to be a little bit patient because something's going to happen. Market is either going to do sweeps all of these equal lows here because this is a weekly time frame. There's a fair value gap here. This candle just blew up, and then there's no retracement into it to continue this time. So my speculation is simple. We'll most likely have price come down to somewhere here. Yeah. So let's take 50% of this move. We'll use our tools like our feed tools. Take 50% of that. If we do 50% of that, look, 50% of that, you'll notice that from this low to this high, this is my 50% here, where this yellow line is. That's my 50%. I've done that on the weekly time frame. Basically, I want to zoom in to zoom out to just understand where price currently is, what price is trying to do, and where price is likely to go. So this is 50%. Usually on the 50%, I usually do what I do nothing. Do you understand? I basically don't do anything when price is at equilibrium. So if price is up anywhere here, I'm looking for sales opportunity. If price is anywhere down here, I'm looking for buy opportunity on the weekly time frame. Do you understand? On the weekly time frame. So your behavior on the weekly time frame transcends to other smaller time frames, but you also need to understand the magnitude of each time frames. All right. So this is the weekly. I'm going to take this out. So and it now makes sense. That is one. The price is currently where at the 50%. And then if you observe the 50% properly or carefully, you'll notice that price is making some level of equal lows. So we can go to the daily time frame to check and confirm. You can see price has created some kind of equal lows here. And this equal lows is very strong. And this is what people call double bottom, double top. Yeah. If you've observed my chart from yesterday, I call this a smart money trap because this is coming from the weekly time frame and it's now transcending into the daily time frame. You definitely see these patterns on all time frame. You see them in the 1 hour, and so you can see that line that I do. You see that line that I do. What are you seeing? Price is what? Price is in a downtrend coming into that zone, right? Price is in a downtrend coming into that zone. If we look at the 4 hours, price is you can see the trend. You can see you check this out, you can see the trend. Price is coming into this zone. And remember we picked up this zone from where? From the weekly into the daily. Now but people spend a lot of time trying to analyze so many time frames, but in essence, all it's just going to do to you is called analysis paralysis. You get confused, you mix up things, and then you spend a lot of time analyzing the charts. Just think about when I started recording this call. If not for the fact that I'm trying to explain price to you guys, I should be done analyzing what I'm doing because I basically don't need to spending more hours analyzing it here does not mean you will find setup. It only means that you're about to make a blunder or make a lot of losses because you are paying attention to what's on. So now look at this low created this high. This low created this high, and for same price, ranging in between these levels. My speculation is simple. Price can start doing anything it likes and start buying back up. That's possibility one, which means price will not come here. This is good. It reacts to a whole lot of global issues, right? But since tariffs has been settled between China and USA in the next 90 days, there's still a strong possibility that price can come down. So I would like to retain this by saying that This is a valid low, very strong low for weeks now. Okay, this low has been here for weeks. Let me show you something. Let's go to the weekly. Um, yeah, you can see where this low started. So I'll put a box. I'll put a tiny box here just to show you what I'm talking about. A box. Yeah. Okay. So there's a black box there. I'll just come back to the 4 hours, and then you can see that box. So you understand what I'm saying? That this low has been here for a while. Do you see? It's been here for a while. So if this low gets taken out, there's a higher possibility that price is going to buy back into um, creating a new high. Very possible. This is how the uptrend really look like. Price goes up, yeah, and comes down, yeah, and does not take out this low. Do you understand? So price has to stay here, highest, worst case scenario. Do you understand? And then creates a new high, right? And then come down to, do you understand? And then comes back again, does not take that low. Do you understand? And then goes back high, does not take that low. And then you see price doing some funny things like this. Uh, some funny stuff. I'm just saying, this is just some sorts of, this is how price falls, right? And then notice that we've not taken this low, and then price goes higher again. Do you understand? When you observe the chart, this is how you see an uptrend. Do you understand? This is how you see an uptrend. And that's how, price makes a new low. This is a low, this is another low, this is probably another low and another low. And, trend line guys will be like, once price comes here, we'll buy. And they make money, right? Everybody who does their lines, basically, it's just that it's when people start drawing lines and start over trading and don't stick to one thing and start to do so many other things, because this market moves randomly. This market is fractal. If you want to do anything, you must stick to one thing, stick to it, and stick to it for a long while to know that it is working or it's not working. It's not that today you'll be like, oh, when I see price coming down like this, I want to buy or I want to sell, and then today you're doing something else. Tomorrow, next time you're coming, you're doing something else. The next time you're doing something else. Can you guys hear me? Can you hear what I'm saying?
Yeah.
Good. So you don't have to. If this is your simple model, if this is your simple model for entering a trade, every time this happens, do your buy if you're buying. If you're selling, do your sell. Basically. So do you understand? But textbook examples don't show you this. Let me delete. Okay, let me delete and let's observe something else again. So let's do this. So, but based on my setup, so let's do this. This is a high, this is a low, this is a higher high, and this is another higher low. Do that. Create a new high. Okay. Hello, and then watch that, and boom. I'll stop here. Okay, so this is it for instance. So this is it. But then, this is the overall trend. Like, this trend is bullish. But does it mean that there are no selling opportunities? Of course, there are selling opportunities. Like that's why I tell people, you don't be in a trade. You are buying a market. For instance, I'm buying a market, and then because I'm buying a market, you just go online on Twitter and then you see one of your forex idolo, somebody who has made tens of millions of dollars from trading forex. He's driving a Rolls Royce. He has G-Wagon. He has every kind of vehicles that you can dream about. And then because you notice he's selling and you are buying, and the next thing you're like, ha 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 ha, my setup is going to fail. No, the market is fractal. So at this point, see this. Did you see that? Aha. So we call that BOS. What do you call that? BOS. And basically, it's known as what we call a break of structure. It's a break of structure because This was the previous high. Price broke it. Price took it up and then created a new high. Do you understand? So we understand that we are still in a bullish market. And then every time there is a BOS, every time there is a break of structure, right? There's something we usually anticipate. We usually anticipate that the price will break the structure up a little bit, and then what is going to happen? It's going to retrace. There's always going to be a retracement because there are people who entered the trade here who did not take profit here. Some people entered the trade here and sold off here. But some people entered the trade here and then price created a new high and they start selling off here. While there are some people who entered here and started selling off here. Now, every time price creates a new high, there's always going to be retracement. It may not happen immediately, but every time price breaks structure, sit down and observe. Pay attention closely. There will always be retracement. So price will retrace. And sometimes we use Fibonacci that price should at least retrace for a 50% discount and what have you. Are you hearing me? Can I just get feedback from one person? Are you hearing me?
Yes.
Good. So that's it. Now, once there's another BOS here, what should we anticipate? We should also anticipate that price is going to retrace if this trend is valid. Do you understand? So there's another BOS here. And then probably and possibly another BOS here. And the trend continues. So at what point, so this is like a major structure. Now understand that structures varies, right? Structures varies in terms of higher time frame structure, lower time frame structure, miniature structures and those kind of structures, right? So let's agree that this is a very big structure. It's a 4 hours time frame. 4 hours time frame. If this is a 4 hours time frame, the whole of this is a 4 hours time frame. How do you think the lower time frame is going to look like? So let's take now if this is a 4 hours time frame, you want to mark out what I call key levels. Key levels at this point, you're marking out here. If this is an uptrend, you're marking out here for a potential reversal. Okay? Now you're marking out here for a potential reversal. A reversal to continue the trend. Do you understand what I'm saying? A reversal to continue the trend. So that means that price can do this. Now, like I said, once there's a BOS, you should anticipate what? Anticipate there's going to be retracement. So price will start doing stuff like this, like this, like this, like this, like this. See, trend line traders are still trading and making their money. Boom. Price most likely taps into the zone and then, do you understand? Taps into this zone. Oh man, why is that not clicking? And it's not clicking the way I want it to click. And then it's price shoots back up. Do you understand what I'm saying? So basically, you will not see this like plainly on the 4 hours, right? So on the 4 hours we have lines like this. Do you understand what I'm saying? On the 4 hours we have lines like this. But then when you come to the 15 minutes, you will see that these stuffs that just look this retracement that just look like one coming down and then another going up and then another coming up. You now realize that when you come to, so listen to me, I don't trade many time frames, okay? I only trade what I call so every day I just check the daily time frame. Like I said, at the beginning of every week, I check the weekly time frame and the monthly time frame. I want to look at how. So there was a time I came up and I was now saying that Bitcoin is going to be bullish, right? Bitcoin is going to be bullish. I didn't just say Bitcoin was going to be bullish because I just felt like saying it. I said Bitcoin is going to be bullish because by the time I went to the monthly time frame, let me show you something. By the time I went to the monthly time frame, entered, By the time I came to the monthly time frame, look at what I saw. I saw that from this high, I'll take my fib. Let me show you something. I saw that from this high, from this low to this high, good. From this low to this high, price has done what I call from this low to this high, price has done what I call a 50% retracement. Right? So that's a 50% retracement. That from here to this point, price has retraced by 50%. And I noticed that there is a range here. There's a range here. There's a range here. Right? It is a range here. So price has tapped into that range. This is what most traders call what we call a break and retest pattern. So when price ranges for a while, price breaks out of that range, and then price retraces on that range, and then price makes a new high. That is it. So I'm saying this because I have knowledge on normal price action retail concepts, right? So that is it. This is how they interpret price plainly. You get what I'm saying? This is how they interpret price plainly. So because price has retraced by 50%, I was like, no. That market is going to be bullish, and that was why if probably you see me post on my WhatsApp status sometimes or most times, I said it clearly that April May is going to be bullish. That was it. I just knew April May was going to be bullish. At some point in April, the market was bullish. Market had to retrace from the bearish correction that happened with March thereabout, and boom, we have this month, which is last month. We'll have a new month, which is this month, and you can see market has been bullish, right? So that's why I said every new week, because every new week, we have about 4-5 weeks in a month, right? Depending on the size of the month. So at the beginning of every week, I want to analyze the weekly time frame in relation to the monthly time frame. I don't come to the weekly time frame all the time. I don't come to the monthly time frame all the time. It's none of my business. But I have days that I come to check it. So when I come on Sunday, Saturday, early hours of Monday, you see those 3 days, any of those 3 days, because most times I like doing my trade review on a Sunday or Saturday night. Either Saturday night or Sundays. If I don't do it on Saturday night or Sundays, I do it early hours of Monday, because most times I don't even take trades on Mondays. Do you understand? Most times I don't take trades on Mondays, but it does not mean I don't trade. I hear people say they don't trade on Mondays. They like to see the market play out. That's fine, but me, if I see my setup on Monday, I will trade it. If it hits stop loss, it hits stop loss. Do you understand? Because I understand the market is fractal, the market is random. Can you guys hear me?
Yeah, I can hear.
Okay, that's fine. So now that's that's it basically. And I want to go back to gold. When I check the monthly and the weekly time frame, very important here. So we've checked the monthly, we've checked the weekly, we've seen where price currently is, and let's go to the next time frame. I usually check every single day before taking any markets, any trades. There are just 3 time frames that I look. I don't have time to be checking all the time frames. God, I remember those days then when I'll check monthly, weekly, daily, 8 hours, 12 hours, 4 hours, 6 hours, 3 hours, 2 hours, 1 hour. I'll check everything like this. I'll still take stop loss. Whoops. I'll still not make anything. Man, that thing gives a lot of headache. I call it analysis paralysis. You don't need to check all the time frame, okay? So I've told you how to check. We're done with monthly and weekly. So every single day, I check the daily time frame. You can see market has been quiet though. Look at this daily candle. Compare this daily candle with this particular daily candle, 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 with this particular daily. These things are daily candles. So you should be looking at the big picture in terms of momentum, because when you are seeing very, very big candles like this, you should know that there's momentum. Something must be driving price. You understand? Because on a normal, look at gold. I'm telling you something. Observe. Look, this is an uptrend. This is daily. This is not 15 minutes candle. This is daily. These candles are very, 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 very small. So it shows you like the overall normal daily momentum in gold. You can see. You can see this is the normal sizes of candle. And then when it wants to correct, you understand? There's either one CPI news, one FOMC news, or some funny news. And you can see the size of the red candle. So understand the asset class that you trade. Don't just I think, I feel, I think, those things they don't make any sense in trading. Do you understand? You can see the sizes of these candles. Just observe the sizes of. You can see the average sizes. You can also get an idea of the average size that gold moves in a day. Do you understand what I'm saying? Now, but then come and see. This is a very big candle. This is a very big. These candles are like 2-3 times of what you're having here. 2, 3, 4, 5 times. Then this is another bullish candle. 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 Something is making price to move this much. What exactly is that? This is all the tariff saga here and there that is happening between China and the United States. And I explained earlier that when countries like United States is having crisis with any other countries out there, people like to put their money into safe assets. Like I said, gold is the number one and only safe asset on earth. Right? 100 years from now, the value of gold will still double, would most likely triple. While you would, if you are buying a house today for $1 million, that same house, if you want to buy that same house 50 years from now or 100 years from now, that same house that is $1 million, you'll be buying it for like $100 million or $500 million, because over time the government keeps printing more money and the value declines. But you'll notice gold will keep making a new all-time high, and this is the latest all-time high for gold. Now, sorry. So I believe you understand the concept, right? So fundamental drive price. Don't just say price is just happening. There's something that makes price to move, right? Fundamentals drive price. So that's why I pay attention to fundamentals. I don't ignore it. I pay attention to fundamentals. Am I a fundamental trader? Not necessarily, but I use fundamentals to help me make sure that I'm not in a trade and then just one big candle just shows up and I'm asking myself, where is this candle coming from? Especially if it's not war, you understand? God forbid. Like I said, nobody really knows what's happening in the market. Nobody can really tell where price is going. But we're able to aggregate this data, make confluence, and speculate. That's why sometimes we are right, sometimes we are wrong. While we're on this call now, gold can just print a very big candle. The size of candle nobody has seen before. Can just print a very big candle like this on a daily time frame. And then I tell you for free, if this happens, something drive price. We can go check CNN or check something, and you may just notice that China just fired one bomb at the United States, or there's a nuclear bomb somewhere in Russia, or China just fired a missile to war. War can cause this. Political uncertainty can cause this. You can just hear news that 700 banks just collapse and they are filed for bankruptcy. This can happen. So those things are black swan events. We do not know. I cannot tell you that this is going to happen. That is going to happen on that particular day. But the little information that we have, we maximize it and use it for our advantage. And that's why it's good to stick to one kind of setup for a while. You don't guess and start jumping. This one is not working. That one is not working. And then if you try a type of setup 1, 2, 3 times, it does not work. You jump to the new one. You jump to the next one. You jump to those things does not make any sense. You understand? So like I said, all setup works. All setup works. Yeah, I have my own setup for all setup work. So this 4 hours. Once we're done with the 4 hours daily, the next chart I want to look at, the daily gives me a daily bias, right? A daily bias. And then the next thing I want to look at is the 4 hours. I don't check the 2 hours. I don't check the 1 hour. I don't check the 30 minutes. The next thing I want to look at is the 4 hours. Okay, so this is 4 hours. Now, if this is 4 hours, if I'm having a structure like this on the 4 hours, when price is here, I want to buy. When price is here, I want to buy. When price is here, I want to buy. Now, this is why people what do I want to say? Okay, so now inside of this one movement, so let me show you something. So let's take a candle for an example. I'll take this candle. this candle, the whole of this candle, right? Are you with me? So let's assume this whole candle to be, you are with me, right? Good. Makes sense. So let's assume this whole candle to be this whole candle. Let's go to the 15 minutes time frame. What do you notice on the 15 minutes time frame? You can see price coming down, ranging, coming down, ranging, and coming down. Right? Good. So that's 4 hours. Let me go back to 4 hours. Alright? So you can see what I'm saying here. You can see that the movement here, this 4 hours movement here, is similar to what we have here. So this is not, you can see similar to what we have here. Like price came down, and then got back to somewhere around that level. Do you understand what I'm saying? Yeah. So I'm just showing you how to read price, and so always pay attention to the size. When you're always looking at the charts, right? Pay attention to the size. Yeah, pay attention to the size of the candles. So let me say, for instance, I have a setup. That's why sometimes I like confirmation entry. So let's say I have a setup here. I am to buy here. Look, let me explain something to you. Pay attention to this. Could be maybe a miracle for some or something. So on a norm, let's agree this did not happen. Even though you can see this, let's agree price this did not happen. So on a norm, we expect price to maybe go like this, and then come down here, and then go like this. Normal movements. Let me explain something to you. So before price got to this level, before price got to this level, you have already analyzed the market just like me, and then you've put in your let's say you've put in your me. I'm not teaching any set entry model, right? I'm just explaining to you how price works. So now let's say you've already put in your entry here, and then good, this is it. You're targeting 1:4, or targeting maybe 1:2 or 1:3. Don't target anything below 1:2. 1:2, 1:3, very good profit targets if you have a setup. 1:2, 1:3, very good. 1:5, 1:10, 1:30, you're on your own, right? Because those setups fails a lot. By the time they would even play out, you may not even have capital to continue trading, because you must have even blown your account, especially when you are starting out. If you are starting out, target 1:2, don't target more than 1:3. Just focus on that, and then build confidence and see that you are profitable, and start withdrawing money. At least withdraw the least $50, withdraw the least $200, withdraw the least $500, and be happy. Use it to buy yogurt, chop better chicken, invest in books, invest in stuff. You'll be excited. You'll be like, at least I've withdrawn money from this. Don't go and start. You've not withdrawn $50 before. You are seeing a profit of $200. You don't want to take profit. You are saying you want to make $5,000. Are you okay? So these are another aspect of the market. So now let's focus on this. I am waiting for my setup. Price is up here. Price has not gotten here. Price is up here. Then, because remember what I said. This is what BOS. Do you agree with me? POS. Simple. Let's put it there so you can see. POS. BOS. So that's it. There's a break of structure there. And what I say about break of structure? When break of structure happens, we expect price to push up a little bit, and then do what? And then retrace. Hello? And then do what? Retrace. Simple. Shikina. Back, Komi. Right? If this trend is valid, it retrace, and then it does not take out this low, and then price continues. Is that not how we do it? Because most times you always put your stop loss below this low. shaking out. Now, but then price is up here because transactional liquidity have happened, and then this is break of structure. Price is up here. You have now analyzed that yes, based on my entry model, this is similar to my entry model. This is where I will be buying this project. Now you are there, you are seeing price retracing. Remember, let me say this. Let me be pouring all of the alpha. Now listen. The first thing that I pay attention to is time. Number one, time. Listen to me again. The most important thing I pay attention to is not price, is what? It's not price. It's time. Number one is time. Let me write it. Number one is time. Kadiko, Abiba Nijifa. Number two. Number one is time. Number two is volume, because time will always bring volume. Number three is what? Price. Then five is, or four. Four will be like sessions. I want to see price sessions, everything, but when I mean sessions, I'm just looking for manipulations. I love to see manipulations. And then setup. I have my setup. So simple. You understand? Simple. Yeah. So let's say for instance, listen to me. Let's say for instance, we are looking at this. Price is up here. Remember, that's what we agreed. Price is up here. You've done your analysis. You've seen the break of structure. You know that this is an uptrend, and then you've put your entry and your stop loss. Then price, the time for these assets, you want to take this your setup that is amazing. You know that your setup, you usually like to see manipulation in your setup. You like to see before, once the time is there, the volume means that price is not. If you notice yesterday and today, you notice that the volume in market has been small. There's a trade that, since we are talking, like a trade can happen under 1 hour, or under 30 minutes, or under 4 hours. But because there's low volume, what's going to happen? That trade can take 7 hours, 10 hours, 12 hours, can even take 1 day. And it's a trade you executed well. Like I said, once we are done, like I said, I take my setup, right? I take my setup on the 15 minutes chart. Because I did trade, I close my trade at the end of that trading day. I know they like to let the trade pass 1 day. Most of the trades that are usually allowed to be more than 1 day on the 15 minutes chart, most times they are not 1:3 trade. They are either 1:5, 1:7, 1:9. But there are some 1:7 will play out on the instance. And also, mind you, your risk to reward is also in relation to your stop loss size. So look at this trade, for instance. This is a 1:4.3. If I reduce my stop loss now to somewhere here, the same trade, the same target, this is now a 1:8.5. The same trade, if I reduce my stop loss even further, this same trade is 1:13. 1:13. Right? So some of the times people get stopped out a lot of time when they are trying to take this type of trade. Is that when you are taking a kind of trade that your stop loss is very small, why are you using risk entry? When your stop loss is not big, why are you using risk entry? You need to use confirmation entry. You want to see all of the manipulations happen, you will have to sit there and wait for price. If you are targeting all this kind of target, some of the reason why we even target 1:3, if you guys observe very well, is that most of the time I put my stop loss, my take profit, and I'm out. You won't see me start doing 1:30 or 1:40 most of the time, because for those kind of trades, you need to have what? You need to have a confirmation entry. 90% all the time those trades will fail. If they are not confirmation entry, they'll fail, because most times you are even trying to be greedy whatsoever. But if you are targeting your normal 1:3, price will play out most times in your favor. Do you understand? So that's that about that. Now listen, price is here, and let's say the time at which price is here is 10 p.m. in the midnight. Nigerian time. This is Nigerian time. 10 p.m. in the midnight. 10 p.m. in the midnight. Again, this is your setup. And then it's still 10 p.m. in the midnight. You now start seeing, boom, there's a big volume, there's another big volume, there's another big, you are seeing all these big candles. And then it's, you now, this is your entry. This is where you intend to enter the trade. At this point where you decide you want to enter the trade, you are still seeing that closer to where your entry point is, you are still seeing very big candles coming down. What will you do? Most times you just want to be like, because you're a magician, you just feel that once price just touch your entry, it will start reversing. What's the meaning of that? I don't understand. Like, why should price reverse? You're already seeing that there's already a persistent volume. Like, there's a persistent volume coming against your direction. It's so obvious that that trade will not work. But something in you or something just tells you that once it gets to your entry is a magnetic point. It's a magnetic field that price cannot pass. So you just once price, most times, as long as it is not within my trading window, I don't even care about it, because most times your setup will not work. Number one is because once you are trading on the wrong time, just know that there are not a lot of participants. When you're trading somewhere around 10 p.m. in the night, Nigerian time, the people who are trading the US market, is the US stock exchange is the largest stock exchange, right? So when the people who are trading the largest stock exchange are closing for the day, you notice that there's a lot of spread, there's a lot of manipulation. It's most of the time it's even difficult to predict price. Even if your setup is meant to play out, it will fail. So why are you looking for a setup by that time on those kind of pairs? Right? And sometimes assets like gold is closed for like an hour or so before Asian open. Now observe what I'm saying. Now, if you are trading outside of your trading window, just ignore it. By default, you will have more failing trades than winning trades. Do you understand? You will have more failing trades than winning trades. So ignore trading outside of your trading window. So what are some of the most interesting times to trade? All right. If you are in Nigeria, some of the best times are London sessions and New York sessions. Overlapping sessions also make sense. All right. So if you notice, most of my trades, I usually want to put out my setup before 8 a.m. Nigerian time, because 8 a.m. Nigerian time is when the London market opens. Okay. So when I am close to that time, what am I anticipating? I know that volume will come. I'm not looking at price first. A lot of traders always want to come to the chart. They always want to come to the chart. They just feel that the money is in the chart. Yes, the money is in the chart, but are you doing it in the right time? That's a question you ask yourself. So it's just like going to the market. You want to go and buy something in the market. Market have not opened, but you are there. You are trying to force the door to open the market, but you are a thief by default. All right. If you are not strategically positioning yourself, but you are going there to want to buy something at that ungodly hour, you are a thief by default. And nobody will sell to you. And that's why most times or sometimes the trade does not place out in your favor. Alright? Exceptions to the fact that you are trading Asian session into the London session. Right? There are still trades, a lot of trades place out in the London in the Asian session. I'm just saying that if you are trading outside of your trading window, I'm saying your trading window, because everybody's trading window is somehow different. You hear some people, they tell you they only trade New York session. You hear some people, they tell you they only trade London sessions. And you hear some people say they only trade Asian sessions. Do you understand? So know your time, your trading window. And why you have a trading window is because you are expecting volume. You're expecting volume. You're expecting momentum. Right? Then you want to look at price. Right? So when I'm looking at price, this is just me looking at price by default. I said something about the fact that when you have your setup aligned out, understand what I call time in the pullback. Listen to me. Time in the pullback. Now, if price is coming like this, boom, boom, boom. See, look, it's not cutting new highs, but it's breaking these lows and then doing like this. Do you notice? It's taking time. And price is delivering well. And price is coming, price is doing like this. See, look. This is not textbook example. So price comes to your entry. This is a good confirmation for your setup. Listen to me. This is a good confirmation for your setup. If you want to buy this trade and it goes like this, if it does not place out and it hits your stop loss, this is a good trade. Time in the pullback. The market is making a healthy trend towards where you are going to enter. That is a healthy market movement. And look at an unhealthy market movement. Price does something like this, and one big candle, and then there's a small movement, and then there's another. You've already seen this very big candle. Then there's another small retracement to the upside, and you're like, yes. When it gets to your entry, what will happen? It will start reversing back. No, brother, it will not. You are just messing with the wrong volume. Price comes like this, it goes like it, and then it does not even retrace back up to 50% of this big candle that has created. If it retraces back 50% of this big candle, makes sense. Do you understand what I'm saying? Makes sense. Then it comes down, makes sense, and then maybe it does something like this. This makes sense, bro. This makes sense. This makes sense. Coming to your setup and then moving. This makes sense. Do you understand what I'm saying? I don't know if you understand the difference in terms of pullback. So when you see those ungodly movements like price start coming down with very big candles and a little bit of retracement and then coming down, just know that price will destroy that your setup. It's not going to be valid. Now I'm saying you are seeing that, and when it is time for you, that's the manipulation probably happening. And then all of the time, I usually like the manipulations to happen before I'm looking for setups. Do you understand? I'm always waiting for the manipulations to happen before I'm looking for setups. Yes. So let me delete this. Oops. That has to go. So I believe you guys now understand how I talk about in terms of observing your time to want to take your setups and this kind of stuff, right? So now let's look at this. Take this out, delete that. Now let me show you something. For me, now this is just a normal trade, yeah. This is 4 hours, right? So we already identified here. So within that 4 hours, let me show you something. Let's delete this. Now, usually in 4 hours, you see stuff like this. Usually here, this is how I want to see this place to look like. I want to see this place to look like this. Come down, go up a little bit. Pay attention now. You know, this normal line is textbook example. There's another movement here. There's another movement here. Look. There's another movement here. There's another movement here. Okay. Do you notice what I've done? So yeah. Good. Usually, this is what I want to see here. This down you are looking at, that I've just done perfectly. That is textbook example on the 4 hours time frame, on the lower time frame, okay, on the 4 hours. Yeah, this is what I want to see it as. It's not a perfect V like this. So this is how it is on the 4 hours. This is how it is. This is how I want it to be. Are you with me? This is how I want it to be. So people call this God, this what I'm just dishing to you is just funny. Now, people call this head. Look here. People call this head and shoulder. You understand what I'm saying? So basically, that's what they call that as. So they call this head and shoulder. Yeah. So this is the head. Let's see the head. Let me do that. This they call this the head, yeah. And they call this the head. Okay, let me share. Can you see that? And they call this the shoulder. Yo, bro. And basically, this is how the, that's why I said every setup works, man. Every setup works. So notice that price started from here, got to this point, came down here, got to this point. Hello, can you hear me? Then now price is doing this kind of disco dance, and then makes this low, created another low, breaks it down, and then went up. Now let's analyze this. Let's see. I always make sure that we have something like this. This is what I call. Let me analyze how the bottom looks like, so we can see together. Look. So that's what I mean. I don't even have time because I've spent time to study price and study how market moves. I don't even have time to go and be telling somebody your setup is stupid, your setup is wrong, this that. There's no time. There's no time for that. Do you understand? Now remember that there was a mini trend here happening here on the 15 minutes time frame, something like this. You can see how I'm drawing my lines, something like this. So it's a healthy price movement. It's not like this one, bang, and then bang. This is not too healthy. This is not too healthy. And then if this guy wants to make this healthy, there's what we call so I can use a fib to measure here. There's a good number of time in the pullback here. I can measure here to here and down to this point. Okay, can you see that? Down to this point. And at least I want price to spend some time and come to this point. At least minimum of this point. This point is what we call the 50%. The 50%. Do you understand? So I want to see price at least come back here and then come and deal with the people down here. Because there's already a lot of stop loss waiting for days on that point. I don't know if you understand what I'm saying. So that's it. If this does not come here, there's also going to be another manipulation here. But it's not going to be easy for price to just and start going back up to go and make a new all-time high. Although this is good, but remember they've consolidated all this tariffs issue. So now market will take more time now to really make some kind of crazy movements. I don't know if you understand what I'm saying. So this is that about that. So we don't like seeing this tap all these this kind of stuff, like, and especially when we want to buy the market. If you want to buy and you're seeing this kind of big candle, not on the 1 minute though, in 4 hours. I'm saying in 4 hours, not 1 minute candle. These small candles are not 1 minute. This big black candle you're seeing is a bearish candle on the 4 hours time frame. You need to ask yourself what exactly is happening there. You understand? So it calls for extra patience and extra caution. But if price is just coming down, that is sweet. Not this one. See, price is slow. You know why price is slow? CPI is coming. CPI is coming like in less than 2 hours and 3 minutes or so. So that's why market is slow. Market is not really. Once CPI happens now, you see the manipulation is going to happen, and then probably my setup is ready. Now let's come back. Let's come back to how the trend looks like. So this is it. This is price comes down here and then makes a new high, and then because it has broken structure, what do we anticipate? We anticipate that this is a bullish market, but then there will be some series of selling opportunities. So if you know how to sell these buying markets, you can take your setup. If you don't know how to sell it, wait for what we call continuation. Continuation is price coming back to this level. It does not take out this level. Price does not take out this level. This is 4 hours time frame. Continuation, price does not take out this level. 4 hours time frame. Do you understand? So that's that about that. So am I still explaining? Yes, I'm still explaining. So if you observe here, price retraced, coming down, getting to this point, and then moves. This is my entry model 1, and there's entry model 2. Now entry model 1 is this. At this point here, let me expand that and make it very big for you guys to see. you have price coming down like this, okay, and then retraced a little bit, and then does this, boom, and then do boom, and then does this, and then price moves, and then price moves. Okay, that's not about that. That's that about that. So look, I'm showing you the same thing, but pay attention this time. It's the same thing. This thing is the same thing as this thing. Okay? So this is a fair value gap, for instance. Right? You can see there's a big there's a big candle with imbalance. Right? Those big candles with imbalance usually create fair value gap. So here, look. Here. This is it. Let me show you. Okay. This is you know, this is a candle. Okay, observe this candle. Good. So at first, this is the last low. Pay attention. This is the last low high that created a new low. Not on the 1 minute chart, not on the 5 minutes chart, not on the 15 minutes chart, not on the 1 hour chart, but on the 4 hours chart. Listen to me. On the 4 hours chart, this is the last high here, while price is going down. On the 4 hours chart, this is the last high. This is the last high. We call that a lower high, and it created this lower low on the 4 hours chart. It created this lower low on the 4 hours chart. Now I'm explaining my model to you, or the setup that I trade. Hello, now pay attention. Pay attention. If you understand this thing, you'll be able to the way I give signals, you'll be able to give signals, and you'll be able to make the same results, even better results than I do. Right? Listen attentively. So now we already know this is an uptrend, men and brethren. We already know this is an uptrend. Like here is an uptrend. But then we've broken structure and price has gone up a little bit. This is 4 hours. I'm explaining price action in 4 hours. Now, what happens is that price starts to retrace, right? Every time price is retracing, look at how price used to retrace. Price will make this lower high, and then it makes a lower low. It makes another lower high. It makes another lower low. This is basic price movement. It makes another lower low. Okay, it makes another lower high. It makes another lower low. Notice that every time when price is doing this, hello, listen. Every time price is doing this, price does not take out this high. One. Price does not take out this high. Price does not take out this high while it's on that trend. Price does not take out this high while it is on that trend. Pay attention. This is 4 hours I'm talking about. Now, price does not take out this high. This high, same thing. Do you understand what I'm saying? Pay attention. Now, the same thing happens continuously. Price did not also take out this high. And what happened? Price was just doing what? Price was just going down and going down and going down and going down. Remember, this is a micro trend in the major trend. Pay attention to price. This move is the main move. This move you are seeing is the main move. Price is bullish. Price is going up, coming down. Price is going up. This is the main trend, is that price is going up. Price is going up. That is the trend. The trend is that this market is bullish. Don't start saying because you start seeing price coming down and small and coming down, and then you are not saying trend has changed. The market is now bearish now. The market is not bearish. The market is only doing what? It's only retracing or correcting because there is a break of structure. I've explained this concept. Now, while all of these things is happening, you are observing price and learning what price is doing. While price is making this trend inside of here, going up and coming down here, what did I say is going to happen? The time you will know that this selling opportunity is over, like it's over, is when you see something like this. Remember, this is now the last low. Now, let's say this high here is this high here. Do you understand? Pay attention. This high here, this small high here, is this small high here. So it's somewhere around here. So you see, this high happens here, and then boom, price comes down a little bit aggressive, and this is what I call manipulation. Hello, good. So that's what I call manipulation. So you can see something similar here. You can see there's already two equal lows here. We call it EQL whatsoever. Right? So here you can already see here that there's already, so this is not, there's already sign that there, if a manipulation should happen, this level has been maintained for a long while, for days now. It's been maintained. Do you understand? See now, look, see, look at something else. Okay, I'm coming back to explain this thing completely. Now, I believe you understand what I'm saying. Now, this high is this high. It did not take out this high. Everything here is happening on the what? On the 4 hours. What happens now is that, boom, this is what I call a sweep. Now look, this is what I call a sweep. Let me use a different color because I have red everywhere now. Let me use black. I call that a sweep, and then let me change how the line looks like. Let it be a normal line. I call that a sweep. I can add text to that, and I put sweep, SWEEP. Most times, if you've checked my chart, you've seen how I notated my chart. You see sweep. This is the sweep. That is the sweep. And this area is what I call the manipulation zone, or what we call, some people call it stop hunt. Okay, listen, pay attention. Let me use a red. We'll have red everywhere. Let me use this energy color. Good, sharp. So you see this area down here, we'll call this area the manipulation. All right, I call it manipulation or stop hunt. What did I say about my setup? I said the first thing I pay attention to is what? So I'm not just telling you something that's cock and bull. I told you there's time, there's volume before I look at price, and then while I'm looking at price, I want to be sure my sessions sync with the time. And then if there's no manipulation, most times I don't have a setup. Do you understand? If I don't have manipulations, most times I don't have a setup. So once there's a sweep, we have this manipulation, and then what happens almost immediately is that price moves aggressively and breaks this previous high, which is this high. Now price breaks this high and then creates what we call a BOS. A BOS. Do you understand? And now, if this BOS is happening at this level, it is not a normal BOS, especially in the micro trend. Remember, this is a micro trend, selling trend, right? If this BOS happens here, I call it, or most people call it MSS, which is market structure shift, or some people call it COCH, change of character, and there are names like transactional liquidity. It's so many names, right? But what has happened here is that I won't call that BOS. Let me call that MSS. Does anybody have any question? So MSS means market structure shift. Before now, the market was selling, but remember this pattern I told us, the price will come down and go up a little bit, come down. All of this zone is what I call the manipulation, and then price creates a new high and comes down. This is what retailers call head and shoulder. That's what retailers call head and shoulder. There are other names for SMC guys and ICT guys and all of that. For that, this is called the power of three, ICT. There's so many names for these things, but I'm just showing you what I want you to see. Do you understand? Good. So once we break the structure, we have just done what we call a market structure shift. So if you were buying that market before, what am I telling you to do? Run away and stop. If you are selling that market before, what should you do now? Run away and start looking for what? Buying opportunities. Okay? I don't know why this is not showing. Let me try it again. Okay? Let's do that. So do you understand? So this is our MSS. Let's do the text. MSS. You get the gist? If you don't understand, write your questions down and get ready to fire me your questions so we discuss. Okay? So this is it. It's simple, but you will need to practice, pay attention. See, this model works. You can see it. This is what I've been trading all the time. Most times I've annotated my chart. I will show you there's a sweep, there's MSS, there's COCH, there's break of structure, there's this, there's that. You have seen it countless times. I've been doing it in the last 30 days. Sometimes it fails, you all see it. Most times it works, you all see it. So I'm not trying to teach you something that is not is not working. So this is it. The main thing is that identify the major trend. Where is price coming from? Price is coming from this level. Where is price going to? Price is going up. Price is bullish. You understand that the overall trend is what? Bullish. Simple. The overall trend is bullish. So when price starts to, you now start seeing all these small, you just know these things is distractions. All this down is distractions. If you don't, but because it's 4 hours, this can take time. From here to here can take time. It can even take 1 day because it's 4 hours. About four candles in this place is already how many hours? 4 plus 4 is 8. 8 plus 8 is what? 16. Right? Plus another 8 is like 24. So 1 4-hour candle is going to form. Another 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 4-hour candle is going to form. And that is all of those candles is 1 day. So sometimes it can take time. That's why we wait. That's why we wait. We're not in a haste. We're not rushing. The goal is that we want to make money. It's not that why market is still up here. You have just shouted because it's an uptrend. Price just retraced a little bit. You've bought here and you stopped out. You bought here again, you stopped out. You've bought here again, you stopped out. Because why? You are not paying attention to the microstructure that is happening. I tell you, until while you know that the trend is bullish, right? Let me show you. You know that the trend is bullish. Okay. Let me do this. So let's leave that. So you already know that the trend is bullish. Once price gets here, you want to buy. But how do you start buying? Because let me tell you the truth. Price can still get here and not buy. And price can still be coming down and still selling 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 and still selling. We want to see a market structure shift before we want to be interested in buying. And now let me help you. Let me help you very well. From down here to up here, price got down here and came up here. So when you look at the zone, this is where the break of structure happened, right? Now we want to use our FIB tools. We want to use our FIB tools here to do this. We want to use our FIB tools here to take this. Look, let me show you something. We want to use our FIB tools to check this level, right? So so somewhere here is, at least we've noticed that this retracement has done more than 50% retracement. So this correction is valid. Okay, this correction is valid. If this retracement was somewhere up here, there's a likelihood that this place will not hold. Price will come, it will take care, and it will come down to this beginning before it goes back up. Okay, so that's that about that. So price has broken structure, price has gone up. Like I said, once break of structure happens, what do you start anticipating? You start anticipating for a correction, a retracement to happen. So it's correction basically. So price starts to correct. And what is your model for buying back this trade? Is that you've noticed that the market is making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And this lower high, lower low that you're seeing, it's visible to an extent on the 4 hours. And when you go down on the 15 minutes, you can see it happening. Now, once price is now in this area, once price is now in this area, hello, once price is now in this area, and to this, once price keeps, like I said, price will not break any of this high. Price will keep coming down, coming down. You can see now. Observe this thing. Observe this thing. This was the previous high. This is 4 hours. I'm telling you, this was the previous high. This is another new high. Price did not break it. Price made a new low. Price created another low. Price came down again. Do you understand? This is still a downtrend. Price is still. You understand what I'm saying? Price is still doing the same. It's still doing the same thing. It's still coming down. It's still coming down. It's still coming down. Now, this is our area of interest. Once price does this, boom, 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 right? It does this and boom, price will start running. This is why a lot of people, they want to start selling they want to start buying the market here. They want to start buying the market here, but they are not patient enough, right? They're not patient enough. Usually, this happens. And they'll start shouting manipulation that price has stopped them out. And the moment price stops them out, you'll notice that price starts to move. There's one of our BTC trades that we took. What day was that? Was it last week? We took that BTC trade. Exactly this thing happened to us. We got stopped out. Boom. And I already know that was going to happen. I already anticipated it. But I gave my stop loss, not so much allowance. And I think the difference was $50. Like, let's say BTC was like in BTC was like in 89,400 as my final stop loss. 89,400. Price got down to 89,350 and then moved. It moved. And since that day, I think I've only caught BTC buy once. BTC has been flying. Do you understand? So from that level, if I had caught that trade and I held that trade, I would have made at least 10x. Do you understand? So always be patient to see this model happens. And then what happens is that as soon as this boom, price will start doing what? Price will start buying again. And once this has happened and price starts to buy, what's going to happen? Price is, as long as this initiated from the 4 hours, price is most likely to go and do what? Price is most likely to go and break the next high. And then transactional liquidity is going to happen again. Does everybody understand what I said? You understand? Does that make sense to you?
Yes, sir.
Okay, makes sense. Delete. I don't want to delete everything, so I'll delete carefully. Yeah, so you guys understand what I've explained here, right? So, like I said, this is it. Market has, removed all the people who are trying to, buy at equal, who are trying to buy at equal low. That's what happened here. Do you understand me? This is equal low. This is equal low. Do you understand? So that's it. So people who are trying to, let me buy. This stop hunt happened, boom, and then immediately created a new high. Price retraced a little bit, and then boom, your price has come. So now we understand what that is, right? Here. So we now understand where market structure. You know that market structure shift is now different from BOS. You get the difference now, right? And BOS is just that price is just breaking structure. A market structure shift can also be a BOS, but a market structure shift is that point where the manipulation has happened and price has changed direction. That's how we know that. That's how we know that if that market is buying, it's no longer buying, it has started selling. That's how we know that if that market is selling, it's no longer selling, it has started buying. Do you understand? So that's it. So now you might have seen me done stuff like this. Let's say for instance, this happens, boom, and we're not in the market. Right? This happens, boom. Price has left us And we're like, oh no, why now? Why did I miss this buy opportunity? I should have bought, I should have bought, I should have bought. No, don't kill yourself. Calm down. So we've identified here as the sweep. We've identified here as the sweep, right? We've also identified here as the break of structure, which is the market structure shift. And then price retraced a little bit into a fair value gap, and then boom, it left us behind. Now, because this trend is an uptrend, we will call this low what we call a protected low. Let me do this. A protected low. Protected low. Do you understand? It's a protected low because price price should not be coming here. Right? The moment price breaks this low on the higher time frame, notice that we're analyzing the 4 hours. The moment price breaks this low on the 4 hours time frame, it means that there is another market structure shift. Do you understand? There's another market structure shift because the overall trend, the big trend that you see, that big bullish trend that has been happening has ended. Now, what we are now anticipating is that the moment price has broken here, price will now retrace. It will now be buying stylishly as if it wants to buy. It will now come back to somewhere around these zones, and then it will start to sell aggressively to the downside. So you will now have like a long-term sell trend. So the area, the trend at which, like the time frame with which the market structure shift happens, will determine how long that trend is going to last. You understand? So if you are seeing a market structure shift on a 1 minute time frame, it's a very short minimal impact time frame. That trend is not going to last for a long time. So I wonder why some people go and be looking for market structure shifts on the 1 minute time frame or on the 5 minutes time frame or even on the 15 minutes time frame. You don't. You don't. You want to be looking for market structure shift on the 4 hours time frame. Okay, so let's say you've missed this move and then price starts doing this now because once there's a BOS, what did I say? Price starts to retrace. This is where a lot of retailers start losing money because once price comes here, they want to trade what we call break and retest. Look, break and retest. So most times we still have people. We have retailers. They suffer somehow. So let me explain to you. Retailers suffer in so many ways. Now, way number one that they suffer is that this place becomes an equal high. You know that this place is a previous high, right? You remember this place is a previous high. Good. And now once price is down here, price starts to come off here. Once price starts to come off here, they do not know that a market structure shift has happened here. So once price starts to come off here, they say, it's equal high. They want to sell. I've traded both concepts, right? And I can tell you this one makes more sense. The one I'm currently showing you makes more sense. It's just a refinement of the retail trading and all of that. So they want to sell the market and maybe make risk 1:2 or 1:3, for instance. Because why? It makes sense. They say this is equal high. Sometimes market comes here and then fails to break this high. Most times it fails to break this high, especially if there's no market structure shift. But if there's a market structure shift, most of the time it will break this high. And then it will break this high and it will still come down. It's a normal thing. It will break this high and then it will still come down. And then this is where retail traders get stopped out and they are angry that, but this market, I wanted to sell this market. Now you can see this market is selling. But what happened? The market has done what we call stop hunting here again. This is another type of stop hunting here. So we know that is a stop hunting because we understand that a market structure shift has happened here. There's most likely going to be a break of structure. And what happens once there's a break of structure? We anticipate there will be a transactional liquidity. Price will start to retrace back almost into this same zone again. Do you understand? So I think that's that. So retail traders get stopped out here once they try to sell equal highs, and then they still get stopped out again because they want to trade what we call break and retest. So this is called double wahala for dead body, right? So because There are some weighted traders that want to sell this. There are some weighted traders that want to sell this because it's equal high. There are some weighted traders who have now waited for price to break this high, which they are not on to. They call them break and retest. So most times when price breaks this high, price is going to retest into here and then continue to buy back. Does this happen? Yes, it happens. If that's the model you trade, you will make money if you know what you are doing. If it's equal high, you are trading too, and you know what you are doing, you will make money. But you will not see some equal high and be scared that this equal high will lose. That one will play out. The ones that you say will play out will be the one that will lose. So anything that you decide you want to trade, follow it up religiously. So if you are doing equal high, always sell your equal high all the time. Or wait for some sort of manipulation like this to happen and then you sell. Do you understand? But if you don't have patience and you just want to make money, you will not make money. It's that simple. Do you understand? So now when you like revenge trade, you sold this double top. You sold this double top and then price stops you out. You say, now this thing is break and retest. You do break and retest again. You now want to buy and then price stops you out. So price has dealt with you front and back. It will always do that to you if you lack what I call patience. Do you understand? So we agreed we missed this and we notice BOS has happened. What do we anticipate? What? We anticipate transactional liquidity or we anticipate some sort of retracement or correction downward. So this is where you now see me annotate my chart and I put something like this. Boom. And then this is now the new protected low because why? We have stopped out people down here and we have stopped out people up here. We have hunted down liquidity down here and we've hunted down liquidity up here. Alright? So by default, since we've created a new high, this becomes our new protected low. Do you understand what I'm saying? Jesus. Do you understand what I'm saying? This becomes our new protected low. Now, what is the next thing to do? You take your fib tool and you measure from this point where the transactional liquidity, from that point where there's a break of structure to this low here, and then you want to see your what? This is your 50% discount. So if you want to buy this market, you're looking for a buy opportunity below this level. I'll change the color to green to indicate buying opportunities. So now we'll remove this. We'll remove the fib tool. I believe we understand everything I say. I'll delete this line because we're no longer paying focus on this angle anymore. Since we've stopped our people down here and we've stopped our people up here, this place is now okay. If we take down this low, like I said, the trend has changed entirely. It is no longer it stopped looking for bullish opportunity. Now just wait for price to come back somewhere up here and start selling it aggressively. So that is another major market structure shift. So if this has happened, this is what I usually see me annotate in my charts that I call structural liquidity. You see things like structural liquidity. I don't know if you've seen me do that. You see me do things like structural liquidity, QMR, or RTO most of the time. So structural liquidity. So yeah. So this is where I want to enter my trade. This is my point of interest, my POI, a point of interest. This is my point of interest to what? To buy this market. So because we have stopped out people down here on this major trend and we'll stop them out up here on this major trend, this is my POI. I call it POI, which is my point of interest. POI. That's it. So that's my POI. Okay. So if I see, that's why every time you see when I have a clean setup like this, I'll always have this down here. I'll have this and I will cover this low. Look, I'll cover this low. See this low? This low that happened here, this one here, I'll cover it a little bit. Not like this though. I'm not scared. Not like this. This is none of my business. Like this, just a little bit. You see me draw this line. This line will always be the bottom, the head of that candle. If it's a wick, the head of that wick, and then I just bring it down a little bit. That's it. That's all you see me do. And then what's the next thing? This is on the 4 hours, mind you. This is on the 4 hours, and that's all. I will now target my. What will I target? I'll now target my 1:3. Even though I know price can keep going up and break this new high, I will still target my 1:3. That's it. Do you understand? So at this level where we have equilibrium, I want to buy below this level. You can buy anywhere here, but I like to buy below this level. And I like sometimes you will see that there's another POI here, like another demand area here. Do you understand? Then sometimes you notice there's another supply and demand area here. Do you understand? Yeah. So you notice sometimes there's another supply and demand area here. Do you notice? So it used to be like that. So most times you now see that there's supply and demand almost everywhere. But I'm not interested. Especially if I'm not interested in anyone, I'm not interested in this one. I just know. So where I might be interested in is this one or this one. But this one is what I call a high probability setup. So most times I would leave this. Do you understand me? Most times I'll leave that one and I'll focus only on this one. Now this is it. That is all about the model. Chicken. There's you can go and learn things like other blogs, liquidity, and all of that. So what that happens is that once price taps into this zone, remember, hear me. This is a higher time frame, 4 hours. Once price taps into here, boom, on the 4 hours, that's my point of interest. It has for price to come into my point of interest. Number one is that it has taken out this structural liquidity, right? It has taken out this structural liquidity a little bit. If this structural liquidity is here, that trade is a high probability trade. So price has taken out the structural liquidity, is now inside here a little bit. Remember what I said. When price is coming down here, pay attention to the time in the pullback. You don't want to see one big candle like this, boom. Like, you don't want to see one big candle like this, very big candle. And then the candle closed. And then another big candle is starting out here. Are you hearing me? Then another candle is starting out here. And then that candle most likely just spoiled this whole thing. So always pay attention to these things, especially once you have your trade ready. That's why sometimes some people will come to the group and when I've posted a high probability setup like this, except I'm not monitoring the trade. So this line that you see here, I always right click this line and I just do what? I just turn it into an alert. Do you understand? As long as it's on price, I just right click that line and I turn it into an alert. I click add alert to the horizontal line. So I'll now create it. Once I create that alert, you can see the alert is showing. Once I create that alert, that is if I'm suspecting that maybe something might happen. I'll just set the alert and I'll go. Once that alert rings, I will come and see if price is making a healthy movement like this. If price is making a healthy movement like this, I will not do anything. But once I notice there's all this funny big candle that I don't like that appear is coming to my buy zone, I will quickly delete the order. It's not because I'm scared. It's just because price is not delivering the way it's supposed to deliver. But if price is doing like this and it's coming to my order, I know once it comes here, it will peak and then it will start to go up. Now this is the higher time frame. What is the next thing to do once price taps into your point of interest? When price taps into your point of interest on the 4 hour time frame, the next thing to do is to go to the 15 minutes time frame. When you go to the 15 minutes time frame, what again or what exactly are you looking for in the 15 minutes time frame? Remember, the 15 minutes time frame will have another trend like this. Remember, the 15 minutes time frame will have its own micro trend happening like this. Do you understand? So what you are looking for again is you want to see something like this, boom. You want to see a sweep, right? You want to see a sweep, one. You want to see a break of structure, two, and you want to see this. and then you want to see this, boom. So you can even now refine your trade even more and catch even higher probability setup. Now, this is a 1 is to 3 on the higher time frame that I calculated, 1 is to 3. That's how I usually do it. Now, when I come to the 15 minutes time frame, not 1 minute, not 5 minutes, 15 minutes time frame, I don't use 1 minute, I don't use 5 minutes, especially for gold. But I use 5 minutes on currency pairs. I don't use 1 minute and 5 minutes on gold and Bitcoin. I don't try it. I always use 15 minutes minimum. So if on the 15 minutes time frame this starts happening, boom, 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 boom. The next thing, once I just noticed that this has happened, something similar that happened on the 4 hours time frame, which is this. There's a sweep here, one, which is the sweep we're looking for. Two, there is a break of structure, and this is what I usually call RTO. I call it return to order block. So most times that's why you would always see, most times you see RTO all the time in my charts, especially if on the 4 hours time frame, most times you see structural liquidity. But most times on the 15 minutes time frame, you may not see structural liquidity. Okay, but then it is what it is. Then you will now see RTO, RTO, RTO. Do you understand? So the RTO is this. Initially, we see the thing is this. On the 15 minutes time frame here, on the 15 minutes time frame, once I notice there's a sweep like this sweep has happened, and then you will now see me do something like this. Most times you see me do something like this. I'll write here BOS, 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 and you notice that that BOS has not happened. Hello, you notice that that BOS has not happened. The only reason why I have this confidence is because I have checked something on the higher time frame that nobody is seeing. Do you understand? I have confirmed all of these things on the higher time frame. So when I come to the lower time frame, all I just want to see is a sweep and a break of structure. So once I see a sweep has happened, and then there's a break of structure has happened, immediately I already know that I want price to come in here and buy back. And then this same trade that is 1 is to 3, if I do this, so which see look, it's not that look, it's not that how do I do this now? So once I anticipate there's going to be a break of structure, I've already put my RTO here. Not that this has already happened, then I'm putting another RTO. No. Price may not even come back to this place again because it has swept people out, and this is a high probability setup. So most times once trade comes into this zone, it just starts to run on the 15 minutes time frame. That's what I'm saying. So that's why whenever I've seen this sweep happen, I want to anticipate there's going to be a break of structure on the 15 minutes time frame, and then price comes back to this point. So once I'm anticipating there's going to be a break of structure, this is what I am doing. I'll do the same thing. I'll enter here. I'll put my entry. This is why you guys can see that I'll put entry. But when I don't even put any of these things, is because what I'm looking for has not happened. So I will now do this. I will cover this low. Remember, I always cover this low. And this low, sometimes this thing will happen at this up part and go up. As long as it can start into my point of interest, this is what I want to be looking for on the smaller time frame. And my only smaller time frame is 15 minutes time frame. So my target, if this is how I cut the setup, my target, once I align my target with this particular target on the 3 hours time frame, on the 4 hours time frame, this same trade that is 1 is to 3 will now be like 1 is to 6, 1 is to 7, 1 is to 10. I mean, I don't used to tell anybody that you 1 is to 10, whatever. My target is still 1 is to 3. You understand? If price then breaks this structure, comes down, enters here, and boom, it takes off. And that's the end of my story. Okay, so that's how I tell my price story. Okay, I believe you guys understand what I just said here. Okay, Chicken RTO means return to order block. There's an order block here I just want price to come back into it and then takes off. Shaking. Sometimes it fails, price will just continue and start hitting stop loss and all that. It's fine. It happens. But sometimes, or most times, price will just take off. So don't start rushing to want to buy here or buy here or buy here. You know this kind of stuff. Always be patient. Always be patient. But sometimes price will even take off from here and you'll be angry that if I had bought it at that level, it would have worked out. But then price did not break this high. You are not paying attention. Price is not but you wanted to buy here. Your mind was telling you that you should buy here, maybe because you don't even have your setup figured out. You now bought here, but then price continued. But price did not take this high, but then price came down here. The next thing that will happen is that price will break the next low. That is it. So that is what we are watching here. See here for gold, price is doing this, and then price is not taking any relevant high because I cannot say this the most obvious high. This low, this high here is what created this low. So it's obvious if price does not take this high and come down, and buy back, will not have a valid buy signal yet. As everything happening here is noise. This is 4 hours. You understand? So this is price structures. I hope you guys I hope you guys learned a lot from what I just shared here because FOMO, it, it's crazy. So let me see if I can analyze the gold setup. So now let's look at the gold. Um, so you can see what I said here. Can you see that price came up, came down, created that little shape that I talked about, moved up, come down, and then went up. What happened when price came down there? Price got back there and did what? And moved again. Do you understand? Price did not move from here. See what I said? You would have been angry that you missed the buy, and then price came down a little bit, and then you'd be angry that you'd have bought again, but then price came up, but price did not break this high. And then what happened again? Price came even much more lower and entered here. Now, why am I waiting for all of this place to get swept? Reason number one is because when price created this high, made this low, swept the whole thing, and created this high and this new high, this highest high, price retraced into the structural liquidity here, and price went up. But when price went up, price failed to take out this high. If price had taken this high, good. This is an uptrend. Let me show you. This is an uptrend here. Look, this is an uptrend. Okay, but see what happened. Let me show you. Now, price took out this low. No longer valid. Price broke the structure. Good. Now, at this point, price came down back to this point, which is more or less like our POI. If you want to, normally, all this area is my POI on the 4 hours time frame. Price tapped into it and took off. Let me do something. Let's see if we can find this area. I saw this buy. I think I took it. Yeah. So let's come down to the 15 minutes time frame. Yeah, I think so. Let's look for that area that I marked. Did you see anything? Did you see what I explained? Did you see what I explained? What did you see? There is a sweep. These are clear high. So look at it. Price came down. This was the previous high. Price came down, went up a little bit, came down. This is a downtrend. Came up a little bit. Now price came down to this point. Do you understand? This is the last low. This is the last time before this low that happened. Then what happened? Price took it out. This is where I always anticipate because there's a sweep here. This is the break of structure. Okay, because it is this high that created this low, not this high that created this low. It is this high that created this low. So the moment price took out that point, we call this MSS, market structure shift, right? What then happens? Um, so what then happens? You see, is anybody understanding what I'm saying? So this is it. Like this point, you can see this is a downturn. Like I said, this is a downturn. This is it. This is it. Remember what we talked about? This is the manipulation here, and then that's the what? That's the break of structure, and that's the return to other block. Notice that it did not take this low, and then what happens next?
Yeah.
Price starts to fly. So now let's look at this for instance. Uh, so look at this trade for instance. Let's say we want to enter into this trade because usually I'll always enter at the edge. So come down and then cover this low. What is our target? 1:3. See that's 1:3. Look. 1:3. Let me delete this. It's not deleting channel. Okay, now it's delete. Okay, so that's 1:3. Did the strategy play out or not? Let's see. 1:3. Did you see? So 1:3 played out. And then what happened? Price is what? Price pressed a little bit. And then, but because you understand that, like I said, because you understand that this area you are entering is what? Is on the 4 hours time frame. You know that there's a high possibility that price is what? Price is going to continue. You know, we call that reversal. So this model works for reversal trades a lot, right? So now you can see. Let's go. You can see price is what. So you'll be paying attention to what we call BAS. So see, if you held that trade till somewhere here, that's 1:12. 1:12. You see what I'm saying now? But on the norm, if you want to take that trade from the 4 hours time frame, it will be like something smaller. So when we come to the smaller time frame, we just want to see that setup happens, and we take our 1:3 in peace, and we relax for the next setup. Now, I said when there's a break of structure, there's always what? A retracement to the downside. Okay? So, but why am I not taking this trade? Why am I not taking this trade? This trade can now play out and go up here and come down and play out. But why am I not taking this trade here? It's because number one is that I'm paying attention to time. What's the time? London session is usually going to happen. And what comes in with London session? Let me show you. Let me show you time and price. I'll go down to 15 minutes time frame. Now, if we look at time, this is London session. The London market has been ranging on the 15 minutes time frame. Now, this point here is the Tokyo high or Asian high, right? This point here is the previous low for London. So my speculation is that if I come back to the first time frame, come back to the 4 hours time frame, I am seeing an equal low here. I'm seeing an equal low here. I'm seeing an equal low here. Can you see that? That's why I'm really interested to enter this trade here. Price has come here before. It has tapped into this other block. It has tapped into this structural liquidity. And then it broke this previous structure, but did not take out this previous high. If this price here has taken out this high, yeah, taking out this high, I would have anticipated that transactional liquidity will just most likely happen somewhere around here, and then price will take out another higher high. Do you understand? Then when you are now looking at it properly, you will now notice that you're not looking at it properly. You now notice that price is making this kind of high. Price is making this kind of high. Do you understand? Good. But price did not do any of that. So what is my possible speculation? My possible speculation is that price is gathering liquidity to create a trap. That's just all that's coming to my eyes and coming to my mind. Okay, so my anticipation is that price is gathering liquidity here. So that's why I now labeled here as smart money trap. Um, so I'm not in any trade yet, and if I'm targeting this major movement to take out this up, I anticipate that price would take out this. Price can just do this, maybe get there and take out these lows. There's a lot of people trying to buy. Um, there's a lot of people trying to buy this market at this level. Some people are already in this trade. Some people are already excited that they are making profit. Price can do anything and go up, and you'll be profitable. You'll be excited, which is fine. Just that I'll miss out. But if I want a valid, strong trade, I want to see this as price gathering liquidity. And then what happens? Price, boom, takes out all of this low. And if price takes out all of this low, that is when there's a strong potential for price to create a new high higher than this previous high. Okay? But what is our target? Our target is just 1 is to what? 1 is to 3. So what happens next? We are waiting for what? Session. So we're waiting for the New York session to play out. Right, but before the New York session plays out, there's a CPI news coming up CPI news coming up in less than 1 hour. So once that news happens in once that news happens in 1 hour, my speculation is that that news always comes in with all these kind of crazy candles. This kind of crazy candles that used to move market like this, up and down. You understand? Those kind of news that used to do this kind of funny candles. So you just see price will just go up, boom, and come down immediately and then moves. So that's it. So if price is able to take out all of the liquidity down here, right? What's gonna happen? First, what I'm looking for is a sweep. Is a sweep of all these equal lows. Sweep of sweep of equal lows. So I want to see a sweep of the equal lows. That's the first thing first. Once I see a sweep of the equal lows, I'm now excited. I will now come down to the 15 minutes chart. When I come to the 15 minutes chart, I want to look for my setup. Okay? So look, another reason why this setup is not so valid. Look at the low. It is this low that created this low. It is not this low that created this low. It is this high or this high or this high that created this low. So we need price to at least take out this high first before we say there is a sweep by the left here and this is a break of structure, which we can now call market structure shift. But then the market structure shift has not happened, right? The market structure shift has not happened. We like the fact, or I like the fact that almost see my weekly time frame. I like the fact that market has been ranging on a weekly and price has been ranging somehow on a daily, and this is so obvious, right? For retail traders, this is a break and a retest to buy, which is another confluence though. But that's not about that. My speculation is I want to see all these lows swept. That is condition number 1. Once all this low is swept, maybe the news in 1 hour time will do that. I want to see this low swept. Once they are swept like this, bam, I will now go to the 15 minutes time frame and I want to see this, 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 and that. Chicken. So once the sweep has happened, right? I'll go to the 15 minutes. Once this sweep happens now on this 4 hours time frame, I'll go to the 15 minutes chart to go and identify this. So this is the switch that happened. I will just wait for the break of structure of this previous high on the 15 minutes chart. Then I'll put my stop loss, my take profit, and this will be my trade. So the trade is more or less like a confirmation entry. It's not a risk entry, except I want my stop loss to be big. And gold can be funny. It can just break, and come down here. So you want to be careful. If this is not a potential entry one, this is potential entry one. Okay, for the uptrend, this is the second potential entry two for the buy uptrend. So that's just it. That's all. That's the only two trades that I'm likely to take on gold this period. If any of this does not happen, I'm not buying anything. I'm not buying in between anywhere whatsoever. If I'm not selling it, I'm not. These are the only two areas I can buy in this market. But to buy this here, I need to see the sweep. But for this one, I don't need to see sweep, except the candle is just too big. uh But on your own, price just needs to come here and go up, back higher and higher, like higher and higher. But this one too, price can still sweep here and go higher. If you can. But I'm not targeting the most high. I'm targeting just one is to three, right? So that's all about the process, guys. If you have any question, shoot your questions. I'm done. Oh, I didn't believe that I'd be here for like this this long hours. Jesus. So that's it. Ask your questions if you have a question.